More than 39 million families are beginning to receive the new child tax credit created under President Biden's American Rescue Plan. A lot of questions still remain, so we're talking to an expert to walk you through everything you need to know. Kevin Whipple, partner and financial advisor at Custom Wealth Solutions, is joining us live this morning with some practical advice for parents still navigating this. Thanks so much for being with us, Kyle.
Thank you so much. It's good to be here.
So when are payments expected to arrive?
Well, surprise, surprise, if this is the first time that you're hearing about this, they actually started on Thursday. So if you didn't know they were coming, you may want to check your bank statement or your bank account, and you'll probably see something in there from Uncle Sam.
And what is the eligibility for this based off of?
Yeah, so it's qualified families. So for right now, the child tax credit is usually $2,000. It's bumped up to $3,000 just for 1 year as part of this massive aid package that was passed back in March. And then for children 5 and under, it's actually increased to $3,600. But the big difference is that instead of seeing this all at tax time, which we normally see the child tax credits, the first half of that is going to be paid out in the last half of this year in the form of monthly payments. So there is a way to opt out. A lot of people are really excited to get that money and get their hands on it. But you also have to remember that if you're borderline in terms of when you owe or you get money back at tax time, it might not be something you want to take right now. You may want to opt out of that.
You talked about opting out. If parents do qualify, do they need to take any additional action at this time?
That's a great question. So if you go on irs.gov, there's a portal for the child tax credit update. If you're married filing jointly, you both have to go on and opt out, or you'll still get some form of the payment. And that's something a lot of people don't know. If you're a single filer, all you have to do is go on and opt out, and you'll get credit for that at tax time next year. Now, the key point would be this as well. We talked about qualified. So there's a phase out for the increase in credit. So if you're a single filer, it's going to be $75,000 of adjusted gross income. And if you're married filing jointly, it starts to phase out at $150,000.
And Kyle, are people able to switch to direct deposits, and how do they go through that process?
Yeah, that's also a great question. So the IRS actually prefers that. It keeps scammers and people from stealing those funds. And you can go on the IRS website and update your banking information as well to do that.
I assume you are probably getting inundated with questions about this right now. What else do you think parents need to be on the lookout for as this kind of first round of this rolls out?
Yeah, I think being smart with what you do with that money, it's really easy if you don't need it right now. And obviously they put this together to help reduce child poverty, but you may be getting those payments and think, I don't know what to do with these. This is a great opportunity to maybe put into your child's education funds, to build up an emergency fund, because I have 5 children. I've seen dentist and doctor bills increase and that kind of thing. It's so important to have that emergency fund set aside. I also think it's really important to remember that as these payments come in, they will reconcile this at the end of next year or at tax time. So if your dependents have changed or your adjusted gross income increases, you may end up having to pay that money back if you get it now. So you really want to be careful of where your taxable income is, whether or not the ages of your children have changed, and how that's going to affect things moving forward.
Kyle Whipple with Custom Wealth Solutions. Important insight. Thank you so much for joining us.
Thanks, Jen.